Welcome to another episode of Healthcare Connections podcast, powered by Healthcare Compliance Pros. I am your host, Jeremy Winn. Our purpose for this podcast is to introduce you to key topics and experts in the healthcare industry to ensure you have what you need to successfully manage your practice. Please subscribe and follow us on our social media channels to make sure you don't miss any new episodes. If you have recommendations for guests or topics for this podcast, email me at jwin@hcp.md. With that, enjoy this episode of the Healthcare Connections podcast. Hello, welcome to another episode of the Healthcare Connections podcast. I'm excited for today's episode. We've got with us today John Eppler. He is a principal at Lee Equity Partners, and he's a member of their healthcare group. I met John actually earlier this year at a show that we were at together, an investment conference around healthcare, and we hit it off and had lots of great conversations. And since that day, I knew I want to have John on as a guest as we launch this podcast. So, John, thank you for being here today.
Awesome. Great to see you, Jeremy. Thanks so much for having me.
Yeah, go ahead. I gave you a really brief intro. Go ahead and introduce yourself a little bit further. Give people some of your background experience that you have.
Yeah, perfect. I'm happy to do it. So I'm an investor at Lee Equity Partners. We're a growth-focused middle market private equity firm. Everything that we do is about partnering with entrepreneurs to help scale their businesses. About half of our firm focuses on healthcare exclusively. I'm a part of that half. And my roots in healthcare go back a long way. I come from one of those healthcare families, physician parents, grandparents, uncles, that sort of thing. Graduated college and decided to go and try my luck in investment banking, but couldn't stay away from healthcare for too long. I gravitated towards healthcare transactions, shifted over to the investing side, and have been at Lee Equity for 6 or 7 years at this point.
Awesome. Thanks, John. Appreciate that. So I think what would be really helpful today for the clients here at Healthcare Compliance Pros, but really anybody in the healthcare space, give us an overview here. We're we're recording this right at the end of 2024, so we're closing the year out. It's probably early 2025 that we release this, so those that are listening, it's probably January when we're going to release this. But give us an overview of what you've seen in 2024 in the healthcare M&A market, trends, etc.
Yeah, sure. Happy to do it. It's actually been a really interesting 3 or 4 years if you sort of go back even further than 2024. We saw in 2021 the peak, probably in recent memory, healthcare services investing market. I think there was something like 1,200 deals done in that year.
Wow.
Valuations at all-time highs, et cetera. Things have certainly cooled since then in the healthcare services investing market. I think 2023 and 2024 were probably 30 or 40% off from the 2021 peaks in terms of healthcare deal count. But there's still activity and I think still creative deals to be done. We try to think about healthcare really in terms of subsectors, not just healthcare at large, which is obviously a massive ecosystem with all kinds of different players. Historically, as a firm, we spent a lot of time in the healthcare provider ecosystem, which is obviously a big chunk of the pie. And I'd say actually probably where the slowdown has been felt the most. And that's for a number of different reasons. I think healthcare provider businesses had idiosyncratic challenges coming out of COVID. A higher interest environment made it difficult to do buy and build transactions. But nevertheless, I think as you look forward, it's an industry where a lot of the same tailwinds that we're excited about and that kind of the sponsor community was excited about 2-3 years prior still exist. Really secular demand tailwinds. The population's getting older and sicker and needs care.
Yeah.
And the real benefits, in our view, to provider businesses coming together, whether that's investing in the care continuum, whether that's sharing best practices across like-minded folks. And so we hope to see a resurgence there. But interestingly, other pockets of healthcare, I think, have gotten more active as people have shifted out of that healthcare provider ecosystem, tech-enabled services to healthcare, things like payer services, pharma services have seen a lot of sponsor activity over the last 12 months.
Okay. Yeah. Thank you for that. And I guess leading into 2025 now, are you anticipating similar to the last 2 years, or do you see an uptick? What are you looking forward to in 2025 and seeing in the market?
So we're cautiously excited for 2025. I'd say the second half of 2024, we've started to see some of the green shoots that we all were looking for earlier in the year. Interest rates have started to come down, which is helpful to private equity at large. We expect another cut, hopefully, at the Fed meeting this quarter. Hopefully, there'll be another couple cuts next year, which will just support private equity buyouts and buy and build strategies as businesses have more cash flow to sort of reinvest into their operations and things like M&A. I would say anecdotally, speaking for myself, we're starting to see uh, a bigger backlog of investment opportunities within the banker community.
Okay.
Bankers have been talking about really high pitch activity through all of 2024, but that feels to be materializing now into more meetings, more companies that they're bringing to market, and so we're hopeful that will pull through in 2025.
Okay. No, that's good to hear. That's a positive outlook. I like that. So let's talk about Lee Equity specifically. I want to give you a chance to kind of talk about what you do and what your strategies are there. So dive into your strategy. What kind of sets you apart? Where do you try and fit in the space? So those that are listening, if they seem to fit in there, they can say, hey, all right, Lee Equity could be a great partner for me as I look at a transaction.
Sure. I maybe cover it in a couple different pieces. So one is really our heritage as growth focused partners. Um, our firm was set up in 2006 with the thesis that we would be helpful partners to the businesses that we invest in.
Yeah.
We wouldn't be folks who show up once a quarter for board meetings, but we would try to be value added board members, give strategic advice, and the firm was set up to do that. About half of our team comes from operations and strategy consulting backgrounds. And I think that's just a tribute to the heritage, which is we really want to kind of be in the trenches with the companies that we partner with and help support their growth vision.
Okay.
The second thing I would say is we're very thesis oriented. What that means is we try to be deep specialists. So healthcare, obviously is a $4 trillion ecosystem.
Mhm.
It's really hard to cover that whole ecosystem and truly be value added sort of experts in every aspect of that. And so we pick 4 or 5 areas each year. Many of those have continued for decades since the inception of the fund, where we look for investments. And we think that kind of maniacal focus helps us identify creative opportunities, but it also helps us partner with folks like your clients in a differentiated way because we've built relationships, we've built experience, we've built track record in certain sectors. Behavioral health is a perfect example. We've invested in that space since 2012.
Oh, wow.
We're looking
Yeah.
for sponsors in and around that ecosystem, really coming off of the mental health parity statutes. We made our second investment in the space in 2017 in a business called Summit Behavioral. And then recently made our third investment in the space in 2022 in a business called Bradford Health Services. And so you can sort of see the continuation of a theme, and that helps us be value-added partners with the businesses that we invest in.
Oh, that's awesome. Yeah, appreciate your insight there. So as I talk to a lot of our clients here at Healthcare Compliance Pros, there's many of them who have stated, "Hey, we're anticipating a transaction in the next couple years. We're looking to build towards that." We have others that will tell us, "I'm getting calls all the time, knocks on my door, people that want to invest or potentially acquire me, merge with me, and I'm trying to avoid it, but maybe it's inevitable at some point." And so we hear this a lot, and I thought it'd be really valuable today if from your experience, if there were a couple tips, maybe 2 to 3 tips that you could share with a practice and maybe an ownership group over a practice that will help them as they prepare for a transaction, and again, just set them up to make sure that they have the highest chance at success, and of course, as they're all seeking the highest potential valuation for their practice.
Of course.
Yeah.
One of them is going to be that should be one among many factors, but I'll get there in a second.
Yeah.
The first thing I would say is obviously finding a partner for a change of control, whether that's in a physician practice or any other business for that matter, is a huge decision. People's legacies are at stake. It's really a marriage.
Yeah.
And so there's a lot that goes into that. And I think folks that sit on our side of the table fully appreciate that. And it's good to start planning for that as early as possible, especially in situations where you have a ton of different shareholders or stakeholders. And so that sort of comes to my first piece of advice, which is one, I would overinvest in building consensus among the partnership. There are a ton of different little decisions that happen along the way in terms of finding a partner. Tons of big decisions, like who's your partner ultimately going to be.
Mm-hmm.
But if you haven't sort of done the work to get everybody on board with actually wanting a private equity partner or some other sort of strategic partner, it's very difficult to navigate what can be, a 3, 4, 5, 6 month long process with a lot of bumps along the way. And so I think the more investment you can make up front and building consensus, I think the better. The second thing, and it goes along the same vein, and it's very tactical, is try to get your house in order. When you find an investment partner who's going to put tens, 20, 30, even more than that, millions of dollars into a practice, that comes with a lot of diligence to make sure that folks are comfortable making an investment of that magnitude. And so we know it's painful, but it's something that we have to do as fiduciaries, right, to our investors.
Yeah.
And there's some groups who are really prepared for that. There's some groups who are less prepared for it. It always takes a bit of time and it takes a lot of preparation. So I think the more of that can be front loaded, that just makes the sort of process of engaging with folks like myself or similar seamless.
Okay.
And the most important is where I started, which is there are a lot of reasons to do a transaction. Retirement planning, wanting to monetize, kind of your life's work and taking some chips off the table, being two, and value is obviously really important whenever you're sort of executing on a transaction. But I think what's almost more important, and what's in my opinion more important, is picking the right partner. There are private equity firms of all shapes and sizes and flavors, like any other industry. They're good actors, they're bad actors. They're folks who are going to write a check and show up for quarterly board meetings, and that may be what some folks want. And then they're going to be folks who really roll up their sleeves and want to help advance the business and help accelerate the J curve of what a group of investors or partners is looking to do. And so there's no one size fits all, but I would encourage folks to do as much homework as they possibly can on what that universe of potential partners would be, and to try to be really thoughtful, because there's value in the upfront deal. Most deals today have a component of rollover. There's a lot of value in that too. And that's really different depending on who your partner ultimately is.
Okay, love that. That's really valuable. All right, selfish question.
Okay.
How does we're a compliance company, right? Talk to me about compliance and the importance of having, a compliant practice, when it comes to HIPAA, OSHA, corporate compliance, fraud, waste, abuse, all the things you have to worry about. What does that do for a deal? Both if you're struggling in those areas or if you're really strong in those areas. I'm just curious, how you see that from your perspective.
Yeah, I'll give you a little bit of a preamble that I should have hit on as we covered our investing strategy, and it'll lead right to that. So for us and for the peers that have been successful investing in healthcare, investing on the right side of healthcare is really important. We want to partner with businesses who are advancing the triple aim, improving access to care, increasing quality, and ultimately trying to make the system more efficient, because we think that's where sort of all the stakeholders are aligned at a nexus. Underpinning all of that is investing in folks who are compliant sort of from start to finish. Providers who want to do the right thing and who are looking after their patients, who are documenting that accordingly, and ultimately sort of on the back end, making sure that all the paperwork is just so that you're sort of on the right side of what's a really complicated regulatory environment. And what we've seen is, it's really, really difficult for independent practices to navigate that environment. It's changing frequently. It's really, really, really complicated. And oftentimes, independent physicians are focused on doing what they do best, which is providing care to patients. And some of the admin stuff on the back end isn't as perfect as it could be. I would say that's part of the value of joining a bigger platform who can, help make investments and things like that. And I think it's why solutions like what you guys offer are really valuable as well, because it is so hard, and it's important to have folks who are experts on staff to do it. It's a core part of our diligence process, for sure, to make sure that there's a compliant program in place, that you have the OIG 7 elements in place. We'll do a billing and coding audit every time we partner with a firm to make sure that things are billed and coded appropriately. But again, the main takeaway to that is just to make sure that you've got folks who are on the right side of medicine, and want to do right by patients and do things in the way that they're supposed to be done.
Love that. I think that's awesome. Very wise, John. To make sure your partner people are just trying to be excellent in all areas, right? And do it the right way. I think that's awesome. So if we got some clients that want to reach out to you, John, and talk more with you, what's the best way to get a hold of you?
The best way to get a hold of me is email. That's on our website, leeequity.com. It's J, last name Eppler, EPPLER, @leeequity.com. And we're always happy to meet with healthcare providers of all sorts. We have made really sort of a track record of investing in the sector across specialties, and so looking forward to meeting with any of you if you think it makes sense.
Awesome. Love that, John. Thank you. And if anybody listening needs help, as John talked about the importance of compliance, you can reach out to me. I can connect you with our team here at Healthcare Compliance Pros. My email is jwinn@hcp.md. John, thank you so much for being on here today. Appreciate having you as a guest and sharing some valuable insight with our listeners.
Thanks again for having me. Really enjoyed the conversation.
Awesome. Take care, man.
Okay, take care. Bye-bye.
Thank you for tuning in to this episode of the Healthcare Connections podcast. For more information on the topic we covered today, you can reach out to me or to our guest. For any additional information on Healthcare Compliance Pros, feel free to email me at jwinn@hcp.md. Don't forget to tune in next week. Thank you.